is the price movement of the dollar. So if I go up here, notice that we reached our profit objectives from yesterday. I said we were looking to fulfill this dealing range from this low to high, kind of reach back down to these lows, and on Monday we reached towards the end. Now, in terms of what's going to happen next for the dollar, just seeing it, it's not looking very good. I do anticipate dollar losing its value even more. From feeling pretty bearish, right? Especially because you look at interest rates. Interest rates have been going down as well. I do anticipate this rally to keep going down further. Bonds have been going up higher. Where are you? So interest rates, bonds. I do anticipate bonds to continue up this rally. We have S&T on the lows. You'll see we can get something like this form where we used London session highs as like a turtle soup, right, for previous resting buy side liquidity, and then use that to short on off of to get ourselves to lower prices. See what happens, right? On indices, I do want to see a break to newer highs, but first I do think we need to accumulate more sell side liquidity before we can see a sponsorship in that. Now it's 9:30. Notice how our didn't get triggered. It's because we opened. See that opening? We opened above our ideal entry price, and we didn't get triggered. Isn't that crazy? Gap risk is real. Oh, there was just a delay, but okay. We're now approaching the CME opening lows, seeing how we react there. Now we'll see how low we react of these lows too. So now we've made that S&T low. We closed above 25%. I mean, and we're still in this big buy program. This could be the retracement that we needed to see prices keep going higher. You know why? This was inside this internal range liquidity from this low to this high, internal, compared to the external buying program. So even though it behaved in the manner that we would have liked to, the fact that there was no SMT, there was no cracking correlation informing that low, this internal low was invalid from the start. To this high, since there was no liquidity to refer back to, it was also in a sense just nothing to refer back to. The dealing ranges need to be formed in a way where it is supported by previous session liquidity, and it wasn't. So that's we have a formation where we've seen a type 2 dealing range as well, right? This low, higher, low, higher, high. This low to this high is a dealing range. What kind of type of dealing range? Type 2. Type 2s tend to be the ones where you can anticipate a reversal. But they're also a dealing range that I like to prefer where they're strong. They're strong in the sense of when they're going up. When they're coming back down, they tend to be kind of weaker. So even though we've made a buy program, this low to this high, was there SMT on that high? No, everything was moving in tandem. So we're still in this buy program as well, right? So if we're going to expand lower, we should first see what was left behind. What was left behind? Well, we still got AM lows, London session lows, Asian lows. We still got this whole set of liquidity pool here that we could retrace back to, right? In the form of what? SMT. See that cracking correlation, right? There's still a chance for market to create new higher highs. It was probably just garnering up all those sell styles before what? Expansion. We still opened up here, Sunday open, okay, that can still be, where are we trading? If we're going long and trading below the opening price of the week, isn't that still bullish? So there's nothing for you to fear. This is just shaking off those weak longs right now. Remember, the algorithm is here to scare you. You gotta stick to your bias. My higher time frame bias is that we're gonna see prices go up higher still. Right? They're still moving in tandem. There has been no cracking correlation on the highs just yet. Everything's been going smooth. No crack. I mean, in the higher time frame.